All right, so welcome back to our monthly Stump Jeff. Asking those tough questions that you might not ask in a group setting. We want you to feel like this is the safe place to come in and ask those questions that you may have about lending in general. And today we're going to have a special guest come on. And Jeff, I'm gonna have you introduce Manny.
Yeah. So Manny is basically in charge of the AMC that we run. It's called EA Appraisers. That's for Mr. Eubanks is the owner, but Manny runs everything. We know how all that goes, right? When there's an owner, there's somebody else that runs it all. This is the guy. So had Manny come on. He came on. I saw him last week at our sales rally, and he said, "Yeah, I'll jump on there for you." So y'all ask him all the hard questions because I just know the mortgage stuff that I push a button and they do the appraisals. So don't hold me to anything.
Yeah. Tell us,
But
tell us
we're
a little bit about yourself, Manny.
Yeah, like Jeff introduced, my name is Manny Meneses. I'm the COO here at EA Appraisal. And like he said, we run the appraisal process for HMA Mortgage along with other clients. But yeah, so we're part of the appraisal management company. We handle the appraisal process from start to finish. Whenever Jeff or his team need an appraisal, they put an order in, and we kind of take it from there. And he doesn't hear from us usually. Usually, it's a good thing if he doesn't hear from us until the final report's in hand. We do everything from assigning appraisals to appraisers in the local market area. Um, Keeping him updated, keeping Jeff and his team updated on inspections being scheduled, inspections being completed, if there's any delays, and things of that nature. We're kind of the middleman for the lender and yeah, the borrower, the agents, and all the other parties involved. So, kind of handle that whole process. Like Jeff said, he kind of keeps out of that process because a lot of times there's a lot of confusion in what's necessary and what's needed, and that's kind of our job is to kind of step in and be the and just be the experts in that and making sure everything goes smooth.
So the process of ordering the appraisal, like Jeff just can't call the appraiser. There's a process in that, correct?
Yeah,
right.
so obviously with everything that went down in '08, there were some things that were put in place to sort of prevent that from happening again. And one of them was implementing a appraisal management company to basically, again, have a middleman in between the lender and the appraiser. So there's no funny business going on. There's a bunch of appraisal independent requirements and all these things that make sure there's no, influence. So Jeff's not calling the guy saying, "Hey, man, I really need to get this deal done," and these are the numbers. It all has to be kind of um, basically there can't be any funny business. They have to come up with their opinion of values all on themselves based on the data with no outside influence. And so it's our job to sort of keep that middleman, that space between Jeff and the appraiser, or any loan officer or branch manager and the appraiser. And that's yeah, exactly right. That's kind of our process.
Okay, great. I've got some
Yeah.
questions here popping up in the chat. Sil Joseph with the Amalgamar team says, why is there a perception that VA appraisers are tough? Good one. Good one, Sil.
Good question. Yeah. So we don't actually handle VA appraisals. You have to have a whole nother certification for VA. It's a difficult loan process, just because the requirements are much more stringent. FHA is more stringent and more guidelines, more things are required for FHA as opposed to conventional. Well, VA is like FHA on steroids. It's just a lot more. They just don't take anything. It's a lot more requirements. You have to have a whole other certification. A lot of appraisers don't. They don't have those certification. It's just a lot. Yeah, it's just when you're dealing with that type of product, it's just a lot of hoops, a lot of extra hoops to jump through. And again, our company, we don't even, we're not
Yeah.
certified to do VA work. So we don't have any VA appraisers on our panel. And to answer his question, it's just a big headache from start to finish in terms of the appraisal process for VA. And so a lot of appraisers don't even mess with it. And that's why there's so limited number of VA appraisers.
Yeah.
Finding one is a challenge in itself. So that's why the process is much more difficult.
And I'll hit on that too, real quick, Sil. Whenever we order that a VA appraisal, it has to go through the VA portal. and we put in that appraisal order, and then it's the next person in that area that grabs it. It's a round robin, and
Hmm.
it could take them a day or two to grab it. And then from there, they have 10 business days to get it back to us. Now, if they start to come up against an issue, which we'll talk through that process, I'm sure, with Manny on the FHA conventional side, but when they come up with an issue with value that they can't hit, they send out what's called a Tidewater request. So if you guys ever get a Tidewater request, just know you have about 24 to 48 hours to get back any comps that are helping you get to that sales price for your buyer or your seller. If you see that word, don't crawl under the couch and not answer that. Get those over there as quickly as possible because they're asking for help. And you can still send them in afterwards, but if you can get it into them before, it makes it a lot simpler. You send it into the lender, and then the lender sends them on. And sometimes it really does help. And they go, "Oh, I see what you're saying there. I see what you're coming up with," and it helps them come up with a value on VA. Um, a little bit more stringent on that stringent side, like Andy was talking about, you're going to run into wood rot is a big deal. Not that it's not on FHA and it's not on conventional, it is, but they're going to call out smaller items on those on a VA appraisal because they're protecting the veteran. And that's why it sounds a lot more stringent. But even then, they're starting to, VA just came out with some releases on their appraisals that say, hey, we don't have to get hit for peeling paint like we used to, or those things. So that's a new deal that just came out. VA's they see that the issue is that they're really stringent on that, and they're backing off just a little bit because it is getting a little bit crazy with those appraisals. So
All right, great question. So,
yeah.
let's see. Okay, this is a good one. What's the difference between the valuation from the county for taxes and an appraisal?
Yeah. So um, that's a great question. The county records or public record, it's a pretty good, they'll get you in the ballpark for most of the time. The difference is that a lot of times those values are sort of developed on a program, an algorithm, or whatever. They don't have an actual appraiser, a certified appraiser, to go in there and kind of actually run the comps. They do a pretty good job, and obviously the technology and all the things that have happened recently with appraisal technology and just sort of valuation technology. I mean, Zillow used to be kind of a running joke in the appraisal industry in terms of like everyone looks at Zillow and what their estimate is and all that stuff. It's actually gotten pretty dang good. Just me being in the industry and kind of following it myself, you're still going to get some that are kind of wildly out there, but I think that's why. Obviously, an appraiser who actually takes the time to go out to the property, find the condition, do all these, do all the things an appraisal is required to do is actually going to be a little bit. It's going to be a much more reliable indicator of what the value is. Right? There's no one at the county going to these homes and checking condition. Uh, they're basically just going off of, well, let's just assume it's kind of like everything else around it, right? Which again, a lot of times that's going to be true and accurate, but we're really going in there, and you can go to a house, it could be in a decent neighborhood, and it's absolutely just outdated and hasn't been touched in decades, and it's a more accurate reflection, right? So that's the difference. A lot of times you might see that like again, the values might be pretty similar. It'll get you in the ballpark, but the appraisal process that we do and having an actual appraiser go out there and take the time to take every single picture and see that it'll be a lot more accurate reflection of that. And so that's why you'll see differences most times. And that's why we always, like especially right now with the tax season and the property valuations and things like that. A lot of people don't, they just sort of see what the county assessed their property at and they're okay with it. But for the most part, they will err on the side of being a little bit higher, honestly, just because obviously it's more money that they get. But that to answer your question, yeah, that's the difference. The main difference is we're actually going out there doing the work, going inspecting, doing the actual real work in terms of finding the most accurate comps instead of just kind of a computer kind of looking around and going, oh well, here's 5 good comps, quote unquote, and kind of slapping a number on it. So that's the difference.
So
And if
Patty
y'all's
Warris here
appraisal,
has a couple
if the,
questions. What are the point system? Oh, Jeff, you got some to add to that?
yeah,
Yeah.
real quick. So on that too, if our appraisal comes in higher than what the county has it at, has the house list or has the house appraised at, it's okay. These guys at the AMC, they don't share that information with the appraisal district. So sometimes we get that question like, oh my gosh,
Mhm.
it came in at 250 and it's at 180. So now I'm going to have to bump my taxes up. Like, no, you can keep it there until they come out and assess their property and then you can fight it. So
That's right.
keep that in mind as well.
I believe
Um,
isn't there a form in the closing docs that you can report it, but you don't have to?
you just kind of skip over that when they
Yes.
send it to you in the mail. Like, hey, we saw you bought your house. They're like, yes, I
Right.
sure did. And this is not, Texas is not, you do not have to divulge that information, even if
Non-disclosure
they come
state. Yeah.
knocking. Yeah. So, um, real quick, Jeremy, those two questions. Patty's actually, I've sponsored a lunch over here at Hometown Title
Okay.
today, and she's in that class. So she sent those two in a text. I don't know what they mean, so we'll do the best. And I told
Okay.
her we'd record for her.
Yeah, we'll see what happens out here. I'm sure Manny's got this. What are the point systems that I heard for taking and removing dollar amounts? And her second question is, do you appraise differently in different seasons?
I'm not understanding the first part. Can you the
Okay.
point system? I'm
Yes.
not familiar.
Okay.
Yeah, if you
Not
could
either.
repeat, I'm not quite sure what they're being asked, what's being asked there.
Okay. I'll ask her. We can maybe get that offline.
And then
Um,
the second one about the appraising during
in
the
different
different
seasons.
seasons. No, there's really no difference in terms of how it's appraised. I mean, I guess if you want to get real specific, obviously, in other areas of the country, we're nationwide AMC, so we deal with reports all over in all 50 states. And so obviously when it's winter time in certain areas, you're going to see longer turn times, right? I mean, we've been told, believe it or not, things being pushed back almost a month because certain roads are closed because, it's on a mountain range or something. And it's just like crazy things like that do happen. But for the most part, the actual process of how you do it and how an appraiser inspects the home and things like that, it's the exact same. And also just the comps that are available, right? Usually in the spring, summer, you're going to have more availability, more comps to choose from. Whereas winter, maybe a little bit of a slower time with things selling. So that's really the only difference. In terms of the actual process of appraising a home, everything is the same.
Okay. I'll stack a question on that because we are in the land of hurricanes. So if we're in the middle of doing a closing and you've already been out to appraise it, then we have a hurricane. Is it likely you're coming back out to look at it again?
Yeah, so that's up to the lender, and usually, yes, the underwriter, it'll sort of be in that limbo, right? It'll be in the
Yeah.
time that while the appraiser was out there, everything was good, and then maybe a few days later there was some damage, and it's in this kind of limbo with the underwriting, and it's in the pipeline. A lot of times, they'll order what's called in the industry a catastrophic disaster inspection, which is basically kind of like a final inspection. The appraiser will have to go back out there and most of the time just do an exterior inspection, drive by. Is there any noticeable damage? And some of the questions on there are like, are there any noticeable damages driving through the neighborhood? Are some of the homes around the subject damaged? Is the subject damaged? Roof damage? Is there any noticeable, things like that? About 95% of the time we see those reports, everything's kind of good and there's no material difference. And that just basically gives the underwriter and the team the go ahead, like, hey, we're still proceeding as is, as scheduled. In the event that there was damage, obviously that's up to the underwriter and the team to sort of figure out what the next steps are. We really don't see too much of that, honestly. It's very, very rare. But yeah, so to answer your question, that there is a process. And normally there is a fee, an additional fee that is required, just like a final. It's a trip fee, paying the appraiser for his time to go back out there and kind of taking the time to take a look at the pictures to the property and make sure there's no damage.
And on that note, from the lender's perspective, it comes down to if the area was considered or declared a natural disaster area, and that's going to come from the government. It's going to come from the state. Could come from FEMA. It just depends, and they send that out all over. And if you're in that county and in that area, then yes, we have to have that fixed and changed. Think of it this way. I know it's a pain in the butt, right? Because we're like, oh my gosh, we're closing today. Well, what if you walk into that house for the final walkthrough and the something is caved in or half of the shingles are missing off the house? Are you going to still close? No. And is the lender going to want to do that? You always got to think about the lender who's giving hundreds of thousands of dollars for this person to move into their dream home. Would you do that personally if you knew that the property that you're holding has an issue on it, a major issue? Probably not. So think of it in that that's how I always think about things, and take my emotion piece out of it because we have to do what's right for the borrower. So
Awesome. Great feedback. Jeff had a question here, and he may have gotten this from somebody. Why does the square footage on an appraisal, why is it different from the appraisal district? And does an appraiser actually measure the home?
Yeah, we get this question a lot from agents. So it probably got that, Jeff got that question from an agent. So, like I said before, with the county assessor versus an appraiser, the appraiser goes to the property. They do the inspection. Yes, they do measure the home. It is required that they do that based on a standard also, called ANSI,
I
ANSI, yes, ANSI standard. And nowadays they go out there with their lasers and they measure, corner to corner from the exterior. Whereas the county has your footprint basically from building records. Some of these houses haven't been measured by someone in decades, and a lot of those things are outdated. So, any advice to any agents listening? Again, a lot of it's going to be pretty similar. Like you're going to see it kind of in the ballpark, but appraisers' measurements are almost always more reliable. I mean, 99% of the time, obviously they are human and they make some errors occasionally, but um, the appraiser is required to measure the house every time he's out there, assuming it's not a drive-by. And for the most part, their measurements are deemed more reliable than the county measure. You don't have the county guy out your house measuring the house. That's never happened. So they're just going off of old plans. They're going off of whatever they can really get their hands off of, and it's just not as reliable.
Yeah, that in I asked that because I do get that a lot, right? It's like the listing agent comes
Right.
back, well, it's 54 square foot smaller, and if you took that and then added it by the 150 square foot per dollar amount, then we're at our number. And it's like, well, they went out there and measured it. I need them to get back out there and remeasure. I just
Yeah.
wanted you guys to hear they measure it every single time. They have to. That's part of their job. If you're ever around and there's an appraisal going on, you will see them measuring that house, or they did it right before you got there or after you're leaving. But just I want y'all to be aware of that from a listing side, but also for the buying side. What's on HCAD is or MCAD or any of the appraisal district websites. Again, what Manny said, it's from when they went and built that house and a builder's giving it to them. Well, not every builder's right. And heck, from 1982, you're selling a house from 82. They could have added on. They could have, so,
Right.
anything could have happened there. So, some builders are known for using attic space, right? Well, you can't live in attics. Well, I guess you can, but some people could. But you get what I'm saying. Like you always go by what the appraiser says, in their measurements. It's going to trump typically what you see on an appraisal district site.
Great question.
100%. Yeah.
Sticking to the square footage, Teresa Magamar has a question. How do you determine how much to adjust for square footage? And is there some sort of calculation that an agent can use to make sure they're staying in the ballpark, especially when they're pricing the home?
Yeah. So this is, I think, literally the war between agents and appraisers is based on this fact alone. But there's kind of a stigma in the industry that agents kind of rely on that price per square foot number so much, and that number is, I'm going to tell you all right now, it's really just not used in the appraisal industry, and I'll tell you why. Um, the appraisal and the adjustments are based on something in the industry that's considered contributory value, and all that means is if you've ever seen an appraisal and they have all the on the grid and have all these um, indicators for what to adjust for: site size, GLA, bedroom count, bathroom count, garages, pools. there's a plethora of options to adjust for. Well, we can't just kind of bundle all those in a tidy little bow and say, well, this is the purchase price, this is the square foot of the home. Divide those numbers, and you're going to have a nice little tidy number. That's not how an appraiser has to adjust. It has to be like, well, what does the GLA difference contribute to the difference in price that I'm seeing? So you have your house and you have a comp, maybe down the street. I'll just give you an example. Let's just say one house, your house that you guys are representing, it's under contract for 200,000, and the identical house next door is a great comp, sold a couple months ago, same square footage, same everything. It has one garage less, but it sold for $2,000 less. Well, if everything is accounted for and considered equal, the appraiser then determines, well, a difference in one car garage is $2,000, and that's what that difference, that contributory value, he can using data that he can prove in the report that garage is worth $2,000 based on that exact same house with everything, the same square footage and everything being the exact same except for that garage. So they kind of have to like break it down like that. Now, obviously, not every single house is going to be, exactly alike. There's, like I said, dozens of factors that you have to consider. So that's why there's all those adjustments. But that's the key word, contributory value, contributory value on what each of those items contribute to that sales price. And to answer the other question, there is no formula. There's no, equation that agents can really use to determine, it's all going to be different. I mean, every house is so unique. It also determines on what someone's willing to pay for a house. There's just so many things that are going on in pricing a home, selling a home, getting on a contract, appraising it. I mean, you're talking about just a wild variance in values, right? And so, that's the biggest thing that we see when we have discussions with agents is that misconception that the price per square foot is kind of like Jeff just mentioned in the previous example. It's a 54 square foot difference, and if you extrapolate the price per square foot, it gets us there. Like, that is, please do not use that logic. It is not going to work. And a lot of agents get upset and they blame the appraiser, and it's like, well, it's just not how values are derived and how they have to adjust for. So to answer your question on how you guys can kind of use this information to better price your homes, I mean, it's difficult, right? Because sometimes you list something and it does get under contract and everyone gets all excited and things like that, even though it might be over the market value. And it's just a real bummer when an appraisal comes in and it's low because you have these two parties that agree to something. So I understand it completely, but the appraiser does. That's why the appraiser exists, right? I mean, if every single contract that was agreed upon went through, then it's just you're relying on people like Jeff and their lenders to sort of just go off that and be like, oh, well, two people agree to it. Let's just go ahead, and appraisers are there for a reason, to sort of backstop and make sure everything is kind of in line, and kind of as a safeguard for the lender. So in terms of using that, in terms of like trying to give you some sort of formula to help, it's hard for me to say. I would just say when you're doing your comp search, to sort of compare, what you should list it at. The things that appraisers look for mostly when they do their search criteria is gross living area, the square footage of the home, not the total square foot, not including garages, not including non-livable living space. We're talking about livable spaces. Searching that as tight as you can, try to stay within, we like to do about 400 square feet on each side, which we call bracketing, right? You want to try to find a house that's smaller than us. You want to find a house that's bigger than us, but within reason. Like I said, 400 or 500 square feet is usually a pretty safe bet that the appraiser will most likely consider that comp. Things like site size. How many times do we get reconsiderations of value where it's like, you please consider this comp, and the site size is like quadruple the size of our lot. And you're like, we can't use this. This is not a reliable indicator or a reliable comp. So square footage is usually the number one thing. And then proximity is the massive thing. I would say those are the two biggest indicators appraisers will look for in terms of their search criteria is how close is it to the property, and what's the square footage. Where does it kind of place? Like I said, if it's 300, 200 square feet within the subject, it's usually pretty good. And date of sale as well as the third one, I would say. Comps that sold a year ago, the market's changed. You could say it could change a lot, it could change a little. Usually appraisers will err on the side of more recent the better. Um, and they'll kind of go off of that. So if it's close, if it's recent, if it's within a certain GLA, like within a couple hundred square feet or a few hundred square feet of the subject, those are going to be really good indicators that those comps are most likely going to be used in their report. And look at those sales prices and find out, um, you know, this is kind of in the ballpark where we should list. And then from there, you got to do your own due diligence and find out how much more over that you want to do, to make room for negotiating. But the other thing I will say is really important when you're doing all the search criteria is sold. Sold is the key. Appraisers can only derive an appraisal value based on sold comps. They cannot. Most of the time, if there's a listing or pending listings on a report, it's because it's a lender requirement. They are not allowed to use um, the price of a sale or a pending comp to derive their opinion of value. So don't when searching for what you should list your house for, you really want to try to just use the sold comps as your barometer there.
It's a good one.
Yeah, great. Let's see. Jeff Shealy, you're coming in hot.
Yeah, I'm
The
just throwing some softballs.
Fannie Mae, Freddie Mac, FHA, VA review the appraisals. If so, does the individual appraiser get dinged if there are issues on the appraisal? And second, is there a value system given in the actual appraisal?
A value system.
Yeah. So
Go
like
ahead,
the one
Jeff.
through five, that we talk about,
Yeah,
like it
the
comes
CU
in like
score.
we
Yeah,
right. So guys, like we get a value and we're like, oh yes, it met value. That's wonderful. That's awesome. But then it gets to underwriting, or like, we need one more comp because of the CU system value came in at
yeah,
1 where it should be a 5, which is really good, but it came in really low. So can you talk
yeah.
just briefly on that
Sure.
one?
So yeah, the CU system is just short for collateral underwriting, and what that means is that for most lenders, and HMA is one of them. Um, every appraisal, once it's been kind of accepted on the AMC's behalf, and we forward it to the lender as an acceptable report, it gets run through collateral underwriting, which is Fannie Mae, Freddie Mac, FHA has their own collateral underwriter portal, and these reports get submitted, and it spits out a score. And opposite of what Jeff just said, one is usually a very good score, or good in the fact that it's a low risk score. Um, some lenders, and I kind of tend to agree with this. If it's scored a 1, it means all it's doing is kind of similar to like the county assessor. It has its own kind of comps that it pulls itself. It goes, hey, it does like kind of like a little search. It goes, these are I think it spits out about 10 to 12, maybe 15 comps, and ranked based on their understanding of what a good comp is to them, to the collateral underwriter. Now it'll just cross-reference the comps in the report to those, and if it matches, the top 5 comps, bam, you get a 1. Low risk. We like this. This is good. Um, if it's a 5, that's usually not good. That's high risk. That usually means very rural. Appraiser had to go very far for comps. The adjustment factors are uh, major adjustments. It's just an ugly report. And not saying that it won't fund or anything like that. Usually that triggers another kind of round of valuation. Sometimes it's like a desk review from another appraiser. Sometimes it's an AVM. Sometimes it's a CDA. It's just kind of like another, like, hey, let's get some more data on this to make sure we're comfortable lending on this one, because it's ugly. We like to say in our company, we're like, it's an ugly one. It's just ugly. It's not super tidy. It's not a cookie cutter neighborhood house and appraisal. It's rural. It's on acreage. There's very few sales. It's just going to be gross. And so that's what the CU score is. Most lenders are running it through this, and it's another great way also for Fannie and Freddie to have all this data in their database to sort of just do whatever they're going to do with. I know I won't get into some of the stuff because it's just appraisal boring stuff that you guys don't care about. But there's some exciting things happening on there in terms of the tools they'll be able to provide the AMCs and other appraisers to sort of tighten up the process and hopefully becoming a little bit more efficient with that. But to his point, now you had a good question. If something got kicked back and it was a really bad score, appraisers, it depends really lender requirements. As Jeff knows, there are lender do not use lists or exclusionary lists, right? So if an appraiser keeps getting knocked down for these reports being really high score, that could ding them, and it's up to the lender if they want to continue to do work with some of these appraisers because it's just sort of a constant. Their grade is just not good, right? Sometimes it's a little unfair, I think, because in these real rural areas where, in the backwoods of Tennessee or Kentucky or whatever, and the appraisers really doesn't have a choice but to go out far and, so it's not really, they're not going to ding you unless you have, a rap sheet or you have some other things going on. But appraisers aren't really graded. Like we have a grading system in our system that we use. We use it, but it's not the end all be all, right? Sometimes, Jeff has one. Sometimes he'll call me, and it's just an ugly one in a bad area that's just really hard to find appraisers. It's like, hey, I know this guy's kind of flaked on us before, or he doesn't do the best work, but we don't have a choice. Like we got Jeff needs a report, and we gotta deliver. So we kind of got to swallow it and just go with it. So hopefully that answers a little bit of your question there.
Yeah, for sure.
Absolutely. Well, we're already at 30 minutes. Do we have a few more minutes to answer a couple more questions?
Yeah, you guys are good. Don't worry about me.
So Melissa Brown has one. She's got a one-story listing, and most of the homes I've sold in this neighborhood or area are two-story. So once that goes under contract and the appraiser comes out, we talked a little bit about geography and proximity and size. How far do you go out, or what do you do when it's a unique case?
Yeah, that's not a super unique one. That's pretty obviously that's honestly pretty common. So a lot of times appraisers now, again, the thing with appraising is so much of it is based on opinion, right? You can have 10 appraisers do an appraisal on one house and have 10 different opinions and values and how they found the comps and things like that. So it's kind of
like
one of
a
those things
CMA, right? It's
right,
like a CMA
exactly.
from an agent. Y'all are working on those, I know. So
Right. And so a lot of times the stories of the house isn't really like this absolute that you have to have all your comps have to be single story. If again, the GLA really is what matters. If you have a two-story house that's 1,500 square feet and a one-story house 1,500 square feet, that's really all the appraisers are going to be looking at. Now, we do ask that, and some lenders do ask, hey, this thing is, we noticed this is the two-story house. You have all one-story homes or vice versa. Do you mind slapping one on there that's similar? And that kind of goes back to the bracketing part of what I said. And when I say bracket, again, it's just having both, having a bracket, having a one-story, having a two-story, having a smaller house, having a bigger house, having a house with a pool, having a house without a pool. That's what I mean by bracketing, just making sure that all the avenues are covered there. So to answer your question about the one-story, it's really just depending on similar GLA. I would not be super, intent on just using single-family homes or vice versa. If your subject is that, it's really just comes down to the square footage.
Great question. I've got a couple. So you're the listing agent. You've got a contract. You're pushing value. We're seeing that some of the market where maybe it's softened up a little bit. You're up there at the top. If the agent shows up to the appraisal, is there any information they should bring? What should they say? What should they not do?
It's a great question. We get this a lot. And again, this is going to be kind of appraiser dependent. Some appraisers, I've been an appraiser for 13 years. And I'm not in the field, obviously, anymore just because I'm running the AMC here. But I know some appraisers who can't stand when people are there, right? They just want to go in there, do their job, do what they got to do, and get out without having to do the song and dance. I know some appraisers who welcome appraiser or agents that come up because a lot of times they provide CMAs, they provide data that the appraiser has access to, but it's always nice to sort of be. I used to like whenever I would get a packet or something like that. I wouldn't look at it at first, and I would pull my comps, and then I would kind of compare with what they had, and I'd either be like, wow, they're actually on track for what they think, or this agent is like, I don't know what they're smoking, but it's I don't know what they're looking at. So it just sort of depends. What I would say is that if you were going to do that and you felt like you needed to, that's totally fine, and nothing against the rules or anything. That I would just sort of respect that the appraisers knows what they're doing, and that they have the way that they do things. But if you wanted to provide anything, a CMA, like Jeff said, is a one document, one sheet things that basically says like, hey, if you were curious how we value the place, this is what we did. Again, try to keep it to just sales, listings, pendings. It doesn't help the appraiser really, just to slap it on the report because it's a lender requirement. But in terms of deriving value, the solds are what really they're going to look at. If there's anything unique in the house, this is actually pretty helpful. If you have like a list of like upgrades, recent upgrades that's not on MLS, oh, they just got the HVAC done and the roof and these things, like a one sheet kind of thing would be usually pretty helpful. Yeah, I mean, I think that's totally fine. Again, you might have an appraiser who's still like, you just get one of those ones who just, they, they just don't want to have to handle with having to, hold someone's hand, or they're at the appointment longer than they should be or whatever. But for the most part, I think it's fine. If you're going way over the top, or, I can almost tell immediately when something's being kind of pushed to the brim, or someone's kind of, I don't want to say desperate, but they kind of know it's not worth it, but they're kind of like really coming over the top, like, oh man, you should, come over here and see this. It's like, I already, in my mind, I'm like, I know where this is going. This is going to be a tough one to stretch or whatever. So, that's usually a pretty good indicator that like even it's a little bit out there, but you guys are doing your job and you're trying to do everything you can to get it thing. But at the end of the day, I will say this, because I feel like there's a stigma on appraisers. Doing this again nationwide and working with thousands of appraisers, for the most part, I think appraisers are really trying to like do everything they can to make the deal work all the time. I really truly mean that. I think a lot of times, sometimes lenders, clients, agents, they feel like there's like some sort of vendetta, and appraisers are sort of like hunting for kill deals or anything like that. I'm not even going to sit here and say that doesn't happen. I think there are some appraisers that feel like they're playing God in this industry, and they have their people's lives and their livelihoods and the things in their hands. But it's so rare. It's for the most part, they understand this is a business. We're their client. I'm your client, and it sort of like works down the line, right? Hey, if the AMC is happy, the client's happy, the appraiser's happy, and it sort of goes down and trickle down effect. And so, for the most part, I think agent or appraisers we're on the same team, right? We're trying to make everyone happy and get someone in a home. That's been my experience, at least. And so that's what I'll say about that.
Okay. So basically, put a packet together, introduce yourself. Hey, this is how we got here, and then leave.
Or just leave it. I've been where it's like the agent shows up beforehand, puts it on the counter, and the appraiser can take it or not, or whatever. But I don't think it's okay to be there and things like that. And again, some appraisers really like it. They like the fact that there's someone there and they could talk to and ask questions, and some don't. So it's hard. It's just not a cut and dry. But I would just err on, don't be too over the top. Don't be too pushy or anything like that. Provide them, if you're going to provide them anything, make it light. I've shown up to houses where it's like they made books, like literally like bounded like books of, and I'm just like, I don't have the time to read through your 50-page, like, this is beautiful, but like, I'm sorry. So just don't go over the top. Anything like that's really not going to be too helpful. It's provide a few documents. If there's something super unique about the house that maybe that wasn't listed on the MLS, or that you feel like the appraiser should know, if something's broken, like, I mean, the HVAC system's not currently working, but we have a guy out there tomorrow, and we're going to try to, get that taken care of, something like that. That's always helpful. But yes, something along the lines of, making your presence felt, providing a couple documents. being there for any questions they might have would honestly be the best help. And if not, no big deal. You're not going to get dinged because you didn't show up to the appraisal appointment. I'm telling you, most appraisers just sort of would prefer just to have that time to do what they're going to do and get out of there so they can start on the report.
So Jeff made a good comment here. He said, so it doesn't need to be part of your packet if you give one, is the appraiser already gets a copy of the contract. And
Yes.
then Jeff had a question, does the appraiser get to see the agent comments in the MLS, not the public section? So do most agents
Yes.
have access?
Yes. Yeah. The appraiser has access to both. I mean, they see everything. And again, different MLSs are different, right? And they're not all created the same, but they do have the agent remarks. They have everything available to them. But if there's anything on there that sometimes like agents, they'll have supporting documents, right? They provide surveys, upgrade sheets. Like I said before, they'll upload it into the MLS, and that's always pretty helpful. That I felt. So yeah, anything that you would provide the appraiser, if you added it to your MLS um, sheet or however that works, and including documents, that's totally fine.
Yeah.
Right.
Just be careful what you put in there, guys. Because I mean, I've had appraisers that would have, copy pasted that piece in there where I can't see that from on the general public comments, and so my underwrite nobody can see that. And then they post that, and there's like, well, wait, there's a XYZ missing on this house. What's going on? And it can create an issue. And be aware of what you put on that appraisal. I had one last it was 2 weeks ago. It had sales price this, everything looked great. It said we're excluding these two portable barns, right? So they're getting these out of there. Well, appraiser went out there. He said, subject to this is your value, subject to these two barns being taken away, portable buildings being taken away. Well, they were already going to do that right at the day of closing, whatever. Well, we had to get them to hurry up, get somebody out there, get those things off of the property, get the appraiser back out there so it cost another $175 for a trip fee. Not the appraiser's
Right.
problem, right? That's something that the agents agreed upon, the buyer seller agreed upon on the contract, but probably could have put it on a non-realty that we didn't see, or something outside of closing that, hey, we all know these are going to be removed. Not the end of the world, just kind of delayed a little everything, or it made us have to speed up and hurry, which isn't always the best thing in what we do is in real estate, be it hurry to get to closing. So just be aware of that.
Manny, one final question, and then we'll get you off into the world. Curious about this from the appraisal perspective, is looking at the market currently. Obviously, we got very hot during COVID. There is all sorts of crazy prices being made, sales prices, and now it seems like there's a little bit of cooling off, a little bit of correction. Are you seeing that from the appraisal side?
Yeah, very much so. I mean, like I said, we're nationwide, so we are based here in Texas, and obviously, yeah, the COVID thing was just insane with the Austin market to this day. I don't think I'll ever see anything like it. I mean, it was just hundreds of thousands of dollars over list price and appraisal waivers like I had never seen before. That was just really kind of eye opening. But yes, definitely since COVID for sure cooled down. Right now, I will say we probably are seeing a little bit more deals cut short recently. Not by much. Again, I think the term you use, cooling down, is appropriate. It's the sky's not falling, or nothing crazy that I anticipate happening, but I am seeing more houses on the market that are sitting there for longer than what we're used to. But we went through just being here in Texas, and I believe this is where y'all are, but
Yeah.
it just we went through shoot, I mean 5 or 6 years there where that was pretty crazy. I don't anticipate that just kind of keep happening, so there has to be some sort of correction. It has cooled down. We are seeing deals that are coming in short a little bit more frequently, but still not to the point where it's like panic time or anything like that. But to answer your question, yes, a cooling down, I have seen that. It's Texas specifically. In other markets, the same or not. There's just still some markets that are increasing, I see. But that's very rare. Usually it's right around stable to slight decline. And it, yeah, there's no bigger headache in our industry than when an appraiser checks a declining market on that little box on page one. It's just the world's ending on underwriting and the lender side. So it just trips a whole nother thing over there. But so we try to work with the appraisers to just be like, hey, just because there's been a slight decline, let's not, just start saying it's declining. Let's, we could still be in that stable threshold, which I think most of the market is stable, still plenty of sales going on. But yeah, I mean, there has to be some sort of correction. So a cooling down is exactly how I would describe it.
Yeah. Yeah. And some markets, and I see that from the sell side, we've got some markets that it's like 2 months of inventory.
Yeah.
Galveston, Texas, that's like 20 plus months of inventory.
Oh,
So,
wow. Yeah.
so it can vary even, fairly close geographically, could vary greatly. So, well, Manny, I appreciate you coming on today and sharing this information. I think, was there anybody else that had want to comment or had one last question? I think this was really good. And I appreciate you taking the time to do that.
Of course. Yeah.
And Jeff, thank you.
Of course, man.
It's your birthday tomorrow, so happy birthday.
Thank you. Thank you.
Yes. Yeah,
Happy birthday.
Thank you.
So I appreciate you bringing Manny in. I think that's a really valuable conversation. I've recorded it, so I'll stick it inside of our AI chat assistant. So if you want to go back and watch it, there's a lot of really good stuff in there. And Manny, thank you for taking the time to share that. And Jeff, thank you for bringing Manny to the conversation.
Hey, my pleasure, man. Just remember, guys, if y'all need anything during the week or before our next Stump Jeff, just reach out. That's what we're here for. Don't hold it in because that time could fly away and we forget about it, right? So just hit me up anytime. I appreciate you guys, and I'll see y'all next time.
Yeah, bring Jeff. Jeff would accept loans for his birthday.
That's right. Yes. Please send them in.
Yeah. We'll do the appraisals for him, Jeff.
There you go.
Right. That's right.
There you go. All right.
Thank
Well,
you guys
appreciate
for having me.
Thank you guys. Till next time, we'll see y'all.
All right.
See ya.
Thanks, guys.
Bye.
Bye.